Hello traders, and welcome to this week's technical outlook video. It's Monday, October 30th. I'm Cristina Parthenidu, investment analyst, and at this video I will share my view on euro dollar, dollar yen, and pound dollar. It will be an important week of several central bank meetings. The Fed, the Bank of England, and the Bank of Japan will announce their rate decision this week. They are all expected to hold interest rates steady, but their forward guidance could cause some volatility in FX markets given the rising geopolitical risks and the impact that those risks may have on the global economy. So starting first with euro dollar and the Fed, the Fed is expected to keep interest rates steady, but whether there's potential for another rate hike in the foreseeable future and whether the US economy is resilient enough to sustain higher for longer interest rates, that could basically create some volatility in euro dollar, which is currently trading at the lower band of this short-term bullish channel. Is hoping for a rebound, but the 20-day exponential moving average is still a barrier at 1.0580. We saw the price rising slightly higher after the stronger than expected GDP growth readings out of Germany, but those were not enough to create strong bullish momentum. And we also have the 50-day exponential moving average and the 23.6% Fibonacci retracement of this downtrend near 1.0640. That could be another barrier before we reach the upper band of this bullish channel at 1.07. Nevertheless, what would improve the short-term outlook is a clear, sustainable rally above the 200-day moving average and the 1.0763 level, which is also the 38.2% Fibonacci mark. The technical indicators are showing mixed signals, so investors will look whether the price will stay within this channel or break below that. It crossed below that channel earlier today, but it hasn't closed below it yet. So a close below it could basically create some selling, especially if the price also steps below 1.0540. In this case, I believe that there might be another opportunity for a rebound at 1.0480, where the upper band of this broken bearish channel is located. Otherwise, continuation lower and below October's low 1.0447 could worsen market sentiment, likely causing more declines. Now turning to pound dollar and the Bank of England. The Bank of England has been an interesting case. Investors have been adjusting their rate expectations quite frequently. They moved from multiple rate hikes to a couple of rate cuts for 2024. So the central bank's forward guidance could be relatively important for pound dollar, given the fact that inflation has been stable near recent lows, but the unemployment rate has been rising, and the latest business PMI figures out of the UK were not that great, so that is somewhat questioning whether there's need for additional rate increases. If that proves to be the case, pound dollar could correct lower. It closed below these constraining line coming from the 2022 low of 1.0324 last week, so that has increased the risk for more downside. Maybe the October low of 1.2036 could act as support to additional losses. If that proves fragile, then the focus will turn to the 1.1940 and 1.19 area, where this constraining line coming from November 2021 is located. Now looking to the upside, resistance. We'll have a strong resistance between 1.2175 and 1.22. This is where the upper band of this bearish channel is located. While not far above that, the 1.23 area could be also a tough obstacle to overcome, given that the 50-day moving average is converging towards that target, towards that level. This constraining line coming from May 2021 is also placed here, along with the 23.6% Fibonacci retracement of this downtrend. So there are a couple of key obstacles to overcome on the upside. the way higher may be rocky, and probably we will need a stronger rally above the 200-day moving average at 1.2450 to become more confident that a rebound could be something more than temporary. And finally, turning to dollar yen and the Bank of Japan's policy announcement tomorrow. The Bank of Japan is not expected to change interest rates once again, but it will be quite interesting to see whether policymakers will make the yield curve control more flexible. Rumors say that the central bank could increase its range target to 1.5% or more. Which is something that is already known by some investors. This is information that is somewhat priced in markets, so it may not cause strong volatility. Nevertheless, it would be also interesting to learn whether the central bank is thinking to switch to a more hawkish monetary policy, whether it's thinking to increase interest rates. So any signals on this front could basically move the Japanese yen. We see that dollar yen is not bearish yet, it's still trading around its 20-day moving average at 149.40. It faced some resistance at the former resistance of 149.90. The pair is within a neutral territory, expecting a break below this green line or above the 149.90 level to get a new direction. If we have a discouraging candlestick set up over here, it looks like an bearish evening star candlestick, which increases the risk for a downside correction. If that downward move continues this week, the 50-day moving average at 148.30 could next come into view. Below that, the 147-146.50 territory could be another area of consolidation before we reach the lower band of this bearish channel at 144.72. Otherwise, if the US dollar strengthens again this week above the 150 level, then all the attention will turn to the 2022 high of 151.93 and perhaps the upper band of this bullish channel 152.35 could also attract special attention ahead of the 153.35 former constraining zone. So that's all for this week's important FX pairs. Thank you for watching, and see you next time. Bye bye.